Central bankers head to Wyoming with the recent stock sell-off seemingly behind them, but will they give the market what it's hoping to hear? Welcome to Market Insight. I'm Elena Casas. All eyes are on Jackson Hole, Wyoming this week as policymakers head to the Fed's annual symposium. The backdrop seems brighter than just a couple of weeks ago. Economists polled by Reuters said a US recession is unlikely this year, and Federal Reserve officials are increasingly willing to hint at a September rate cut. That has now been fully priced in by the market, but investors will be looking for clues as to what will come after that first cut. Joining me now to talk about all that is Chris O'Keefe, Managing Director at Logan Capital Management. Chris, hi. What should investors be listening out for at Jackson Hole then?
Yeah, so I think everyone's going to be very focused on the 10 o'clock meeting on Friday. I think investors have felt as though Powell hasn't been as communicative as they would like him to be. We are, really getting to that inflation target that he's talked a lot about. But a few weeks back we had labor data that was just not as strong, and people were very concerned that maybe we're already in a recession or things aren't going as well. So I think we'd like to see a little more guidance there on how he thinks about the labor markets versus inflation, that sort of twin goals that they try to achieve. But yeah, if he could just tell us that interest rates cuts are coming and more on the way.
What sort of signal do you think we might get, though, about the longer term? Of course, the market has priced in a cut for September, but what about the next, let's say, 6 months?
I think he's going to be, in terms of that, as cryptic as usual. I think he's going to be very data dependent. I think people are assuming we'll get to 50 basis points cuts, this year in total. But and I do think that he wants to achieve better communications with investors, given what happened with the recent pullback in the market. That did seem to be confusion there coming out of thoughts about what the Fed was going to do. But honestly, I don't think he's going to say too much more.
Do you think those recession worries that caused this month's market sell-off are fading away now, or could they make a comeback?
I think they always could, but I thought the retail sales data was surprisingly strong. If you look at Walmart's earnings, better than expected, and they guided higher. So the consumer really has been more resilient than people thought. So I do think the economy overall is resilient, and I think we're seeing on the industrial side as well, manufacturing side, but I think it's going to be more of a smooth glide path to slow growth at this point in time. So I'm not a believer in recession today.
What does that mean for investors, though? How should they position?
I think that's a great question. And, look at what's happened recently here with utilities being sort of the best performing sector in this quarter so far. And also financials are doing well and REITs are doing well. So investors have been moving very quickly to to add to sectors that are more likely to be positively impacted by higher interest rates. But I do think also, if you think about the consumer, and many have been sort of waiting around for better rates, lower rates rather, to sort of commit to some larger projects around the house. So we like the housing sector as well. And I think also, given everything that we look at, better to sort of take a more defensive tact, bit of a yin and yang with technology and healthcare. Healthcare looks very undervalued to us, and I think as people begin to appreciate the consistent growth there in earnings and dividends, I think that's a sector that actually could do well here relative to technology.
Thanks so much for joining us, Chris O'Keefe of Logan Capital Management. And that's Market Insight. Don't forget, you can watch more videos on Reuters.com.